everyone, I'm Roger Conrad, and welcome to another issue of Questions and Answers. As always, the rules are you ask the questions, I answer them. So let's get started. Okay, so our first question is from David in California. And David wants to know if we're going to see a Santa Claus rally this year, in utility stocks in particular, and the market in general. Well, David, we certainly haven't seen one so far, but I think hope does spring eternal. More importantly, though, what you want to do is get ready for what lies ahead in 2016. And unfortunately, our view isn't so sanguine at this point. We look for a bear market to unfold sometime in the next 6 to 9 months. Utilities have underperformed over the past year, so that should limit some of the downside. They also tend to do well in bear markets because of strong earnings, reliable dividend growth, and high yields. So those are things people tend to look for in bear markets. I think that will definitely be the case this time around. A lot of worry has been out there about what the Federal Reserve might do on interest rates. We do think they will raise them. But if you look at what happened in the last tightening cycle, which took the Fed funds rate from about 1% to about 5.25% rather, from June 2004 to June 2006, utilities actually had a banner performance. They were up about 60% in terms of total return over that time. So that was one of their best performances ever, really over a 2-year period, and they outperformed the S&P 500 by about a 4-to-1 margin over that time. So pretty strong performance. And what that tells us is really people buy on rumor, I guess sell on news, but also that tightening cycles aren't necessarily bad news for utilities, as is pretty much the conventional wisdom right now. So we see an opportunity there. We think it's a good time to start looking at high quality utilities for your portfolio for the bear market to come. And whether we see a Santa Claus rally or not, that will be a good thing for your portfolio. So our next question is from Mark from New Jersey, and Mark asks if the climate summit in Paris is going to change the paradigm for utility stocks and energy stocks in general. Mark, I think to the extent it does, it will be a positive. I think utilities are definitely the biggest investors right now in solar in the United States, biggest investors in natural gas as well. And both of these are fuels that are fuel types that will benefit to the extent that carbon emissions are clamped down on at the Paris summit. But I think what we're looking at here is mostly positives. Even ExxonMobil has signed off on the inevitability of more restrictions on carbon dioxide. So I think it's a done deal, but I think it's mostly positives that we can look forward to, and particularly in the utility space. Okay, our next question is from Arthur. He's writing to us from Florida, and Arthur asks if because the fact that the Chinese yuan is now one of the world's reserve currencies, doesn't that mean that the day of doom for the dollar has arrived? In a word, no. For one thing, central banks around the world tend to hold big baskets of a lot of different currencies. For another, the U.S. dollar is so much more liquid throughout the world. That's another huge component of what makes a reserve currency. We've been hearing the same sort of stuff, for the last several years. The biggest burst of it, I guess, came when gold prices were over $1,800. Now, of course, gold, which we actually like, is down close to $1,000 again. People tend to be very melodramatic about these geopolitical events. We advise you to keep those out of your portfolio management. Are there some bargains in non-US dollar stocks? Yes, I definitely think so. Yes, we're recommending some, but don't let this type of sensationalist garbage cloud your investment philosophy and strategy, particularly not at a time like this. Okay, so our next question is from Gail from Ohio, and Gail wants to know if it's time to buy water utilities, given that they tend to have a lot of the characteristics that I just talked about as being safe bear market plays. And Gail, I definitely think water companies are something to take a look at. Now, of course, we've recommended some in our portfolio. Aqua America Water is one I've owned, actually going back to the mid-1990s. It's been a great investment. These tend to have very low yields, and that tends to be a turnoff for some, but I think they make up for it in terms of dividend growth. I do think you want to be careful with some of the water companies, particularly those in California. They're facing a historic drought out there, and it's really unknown how much regulators are going to wind up in the end supporting the utilities at the expense of customers and very high rates that will need to be charged in order to recompense the utilities for the loss of demand. But I do think this is an area we're going to look at, and in Conrad's Utility Investor, you can look forward to some recommendations. Okay, our last question of the day is from Martha, and she's writing from Texas. And Martha wants to know if it's time to buy beaten down yieldcos. And for those of you who aren't familiar, these are kind of master limited partnership lookalikes. They tend to pay pretty big yields because the owners dish out most of their cash flow. What sets them apart from master limited partnerships is pretty much that they own power plants. The yieldcos are spun out of utilities for that purpose. And I think the answer to your question is some are and some aren't. I think there's some yieldcos that have definitely blown up. There was a big craze about issuing these things. And some of the very popular ones like Terraform now look pretty shaky. But there are a number that are, I think, in very good shape. One being NextEra Energy Partners. And I think, again, this one has a very strong parent. It's got really good power plants, and I think its dividend growth story is intact. So it pays a lower yield than Terraform and some of the others, but that yield is infinitely safer, and it's going to grow. So be selective. So that's all I have for today. If you're interested in anything you've heard today, if you're not a subscriber, please visit conradsutilityiinvestor.com. That's conradsutilityiinvestor.com. We have free content. We have paid content. We'd love to hear from you. Thanks very much for tuning in.